back. You're watching IndianOpen right here on Bloomberg Quint Live. A quick glance at what Asia has been doing, and then we get back into the market discussion with our market experts. Nikkei 225, we're down marginally. We've got gains coming into China and Hong Kong. Hong Kong's up about 0.5%. For the SGX Nifty, absolutely flat is where we are at. Just a 4-point bump up, 11,566. So probably could anticipate a very flattish open this morning. Getting back to our market discussion then with our experts, Sanjiv, Bhasin, Executive Vice President for Markets at IIFL, joins us on the show. Along with him, our technical experts, Gaurav Bissa of LKP Securities is here with us, and Chandan Taparia of Motilal Oswal Financial Services joins us on the show this morning. Sanjiv, let me start off with you with regards to the overall sentiment of the market at this juncture and what happens as we kickstart trade. We're talking a lot about interglobe aviation, and the expectation is that it is going to open gap down. However, from an investment standpoint, will you look at aviation as a sector per se? And then do you think that it's time to capitalize on what SpiceJet could do, considering where interglobe aviation and Jet Airways are at this point?
Yeah, good morning. So, Devina, I think it will all be rhetoric. It's not going to have anything on the functioning of the company or the plane or the planes, and the traffic is going to be as usual. So, I think all falls will be bought. This will be a minor rhetoric which will get diluted by some intervention. But boardroom battles will often linger on, and slowly the effect on the stock market ebbs down. You're in a phase where anything negative is now getting more macro, it is getting micro assessed, and people are getting bearish. I think this is going to be a passing storm. We know that there are just two listed stocks which are there. So if you are going to be in aviation, it's either SpiceJet and Indigo or nothing. We are relatively sanguine on the airline industry. We think there is a lot of other places where we are getting opportunities on the consumption side, and we would rather put our money there rather than aviation. So for us, if we had to be long, you would watch these declines to buy, because it will have a marginal 1 or 2 day passing effect on the stock price.
Okay, got that. Let's talk, since you mentioned consumption, let's talk about the brutality the stock of Titan witnessed in yesterday's session post their Q1 update. Would you say that this too shall pass for Titan, or probably, considering that the valuations were so stretched and that Morgan Stanley probably downgraded it because they didn't want to take a chance on the extended stretch of the valuations, you feel that probably wait it out to enter into a Titan?
Well, closer to 1,000, it will become again a very good buy. So we have a simple approach, Devina. We are choosing some blue chips, some mid caps, and we are telling our clients the next 12 weeks are going to be volatile. But after these 12 weeks, that is middle of October, you are going to see the market go only one way, and that is upside. You are missing the woods for the trees. There's enough stimulus for consumption. We are seeing the change of the weather patterns with monsoon offset being well placed. Bond yields are at a new low. And yes, the caveat that Titan is an expensive stock, but it's a must-have in a portfolio, as is Bajaj Finance. So the next 12 weeks, we'll see the bottoming out, whatever the case for a brokerage call, sell or buy. And we think that will be a good opportunity to buy into good quality stocks. So do a SIP for the next 12 weeks, but it's a must-have on corrections closer to 1,000 rupees.
I tell you, one man who was very happy yesterday reading the Bajaj Finance update would have been Sanjiv Bhasin. He's been so bullish on Bajaj Finance the last few times. Sanjiv, we'll get to that in a bit. It's good having you in the morning, by the way. But just before we get to that, get in Chandan Taparia of Motilal Oswal, as well as Gaurav Bissa of LKP to talk about their views on the markets. Gentlemen, we just have 4 minutes left. So I first want to get the stock calls out of the way, and thanks so much for being patient with us today. And then we'll get to the index calls. Gaurav Bissa, to you first. What are the 2 stock ideas that you're recommending for the morning?
Good morning. I have 2 buy recommendations. The rationale is quite simple. It's on the base of short cover we have seen yesterday. The first recommendation would be buy on Havels, where we have seen about 4% short covering happening yesterday. It's bounced back from the trend line support area. It is from the bullish harmonic pattern. We call it the bullish bad pattern. One can keep a support of 725 on the upside. 765, 770 is what I would be expecting. Second recommendation would be from the pharma space. It would be buy on Glenmark Pharma. Again, some of the short positions have been covered. Around 3.5% short covering has been seen. On hourly share, the stock has given a small breakout sort of stop loss of 443. One can buy it for target price of 465.
All right. Chandan, what about you?
Yes, first it is buy on Reliance Industry. After the consolidation or correction of last couple of weeks, the stock has exactly taken support at 1245, 1250 zone, and respecting to its rising and the horizontal trend line on the daily and the weekly scale. The stock is turning from its major support zone in the retracement levels. So that's why some bounce could be seen. So recommending to go long on Reliance Industry. One can buy with a stop loss of 12.55 for an upside target towards 13.30. Second trade here we have selected to be with Bharti Airtel. Even after the market weakness, the stock is holding the gains and making higher top, higher bottom formation. It is respecting to its rising support trend line and holding well above its 50-day exponential moving average. So entire data setup suggests up move in the counter. One can buy with a stop loss of 354 for an upside target towards 377 levels.
There are some other key stocks to monitor today.
TCS.
TCS, the earnings actually, Sanjiv, Bhasin, let's come in on that. Do TCS earnings make you believe that TCS itself or the IT pack should be underweight now?
Correct, and we relatively think that the only other tailwind which was there is the rupee. And you are missing the woods for the trees. The rupee is at 68.5. Where is the 72 levels which everyone was so bearish? And I have not heard of one bullish call that the bond yields and rupee are showing you strength in the Indian context. So for me, TCS is a prime example of being one of the best wealth creators. It will continue to be in most portfolios. But if you think you're going to see an outperformance, I would be on the sideline. I think there are enough industrials where you can make a lot of money on consumption, auto, on stocks like L&T, BHEL, where the visibility and the road forward seem very, very positive. So for me, IT is an avoid or a reduce on any rally.
What would a trader do, Gaurav, Bissa, with TCS once it opens lower this morning?
There's a lot of buying interest that we saw in last couple of months at levels of 2,080, 2,100 on the spot side. We're not seeing very aggressive buying happening in the put side as well. They put concentrations live between 2,000 2,100. So as long as it's trading around level of 2,080, and if we see a bounce back again happening about 2,100, then I think that would be a decent trading bet. It can head back again towards level of 2,200. But if it continues to trade below 2080, then there's a good chance that it can approach levels of 2000. I don't see a very steep fall, so to speak of. But yes, if below 2100, things can be a little bit weaker. But as long as it's about 2100, I think one should be on the long side.
All right. That's on TCS, 2,133, where the stock is most likely to open lower on the back of those slightly disappointing numbers. More so, at least on the margin side than the revenue side. 30 seconds left to go for market pre-open. Asia's pocket is mixed bag. SGX, no clear indication, absolutely flat. So we'll wait and watch as to how the pre-open shapes up for ourselves, yeah. But also watch out for what Titan does and whether or not it carries forward those losses from yesterday, or there is some buying that comes back, at those lower levels for Titan. And according to Sanjiv, at 1,000 levels, it's a short buy to have in the portfolio. That's Titan Industries. Also watch out for some of those banks like HDFC Bank, HDFC Limited. These were the stocks, that saw a little bit of pressure. Valuations being extremely stretched, so some amount of pullback for these names. Nifty 50 opens with a cut of about 1/3%. Sensex moves up in the pre-open trade, but we'll wait for these prices to stabilize a bit more. Individual counters then taking you through the bigger movers, the gainers, stacking up tall is Gale India, which is up about 2% at pre-open. Yes Bank, that's up about 2%. There's a Jefferies note that has just come out, which has said that there's a lot to fix, starting with capital. They've not managed to raise any fresh capital since the new management has taken charge. They've been talking about it, but nothing material has happened. They've actually placed a target price of 80 rupees. Bear case 66, bull case 153. The other one is India Bulls Housing, which is up about 1% TCS should pull that up. That's the big one to see how it's opened up in trade. 1.5% under for TCS at 2,100. Others, plain Jane, nothing big happening in any other stock except for a Maruti, which in yesterday's session closed below 6,000 and has opened 0.25% higher.
Interglobe Aviation, Devina, we should pull that up because that's clearly the stock in focus this morning. Well, let's see if there's a 10% downtick out here or slightly lesser. We'll wait and watch what the pre-open date suggests, but this is arguably the talking point of the morning. And then, of course, SpiceJet, maybe just a related name out there. Let's see if there is some impact on SpiceJet on the upside in the session today. A couple of percentage points. Let's wait and watch. Not saying that there's a direct correlation between whatever is Indigo's loss is SpiceJet's gain, but do watch out
But
for
the fact that
SpiceJet
it's
too.
already come off from the
It was
highs that it
150.
had made, so there is that headroom for it to actually catch up to there, considering that the environment is more sanguine now.
Yeah, and you know, I mean, Goldman came out with a note. We mentioned somebody should have told them about Interglobe Aviation. They're bullish on Indigo too. Somebody should have told them about these filings. But Goldman's note on SpiceJet, very bullish, target price of 161. Let's wait and watch if that works. Last but not the least, I just want to mark REC before we mark the currency and the bond yields. REC should come up. Yesterday was down about 16%. Let's see what it's doing today. We'll ask Sanjiv Bhasin about REC, by the way. But the rupee and the bond yields very quickly before we move on. The rupee at about 68.62. And the bond yield should have started now 6.59, so they remain subdued. No big gyrations there, but interesting move. Okay, now two key points on the fundamental side. Sanjiv Bhasin, you probably answered aviation, but I want to talk about REC first before I talk about SpiceJet. Rural Electrification Corporation, I remember in the past, at lower levels, you've been a bullish person in PFC, REC. Yesterday's fall, technical in nature. The selling is not out completely, by the way. I think 120 crores sold yesterday. But are the valuations attractive?
Yeah, so good. Neeraj, you recall that 75 rupees was PFC and 100 was REC. There was a 9% dividend yield and pessimism all around. And we told you that this would be a star in the making. Now, in 1 year, they are up more than 50% and that 9% as the yield. So I think all these falls will be there because of the CPSC exit and so on. But that's temporary in nature. The fundamental businesses are doing extremely well. You've seen the power supply, the cost of power and delinquencies be low for both REC, PFC. In the lending space, they are borrowing at the lowest levels in the last 1 year, and their net interest income is surprisingly, pleasantly surprising on the upside. We still think there's a 20% upside in these stocks from the recent highs. 180 on REC and 155 on PFC is our target. However, as a disclosure, like we said, we are in these stocks from much lower level and often have positions which are, mitigate the rallies which are there. So we are very, very bullish on the PSU pack as a whole, given that bond yields, treasury income for the likes of State Bank, Can Bank, and Bank of Baroda, and on this side for both these power lenders will be very, very smart in this quarter and going ahead.
The other one that I want Chandan's view on is Maruti. Now, once again approaching 6,000, but it was the breach of that support level at around 6,400, which it had taken support at for the last 4 occasions, I believe, and bounced back from those levels. Chandan, is there more downside to Maruti, or would you be a buyer at 6,000?
See, technically the stock has broken its multiple support of 6,300 zone, and the stock has been underperforming from last couple of quarters. However, technically it has broken the support of 6,300 and shorts are there, so some more decline could be seen. But I believe once it comes near to 5,700 to 5,800 zone, that could be again a good buying bet. So if someone is looking for intraday or trading point of view for next 2-3 trading session, then some dip could be seen. But I think near to that zone, one can again accumulate. However, it may take time, or take the contra bet if it moves above 6,300. So as of now, I'll look at the key level of 6,300 and to accumulate near to 5,700 to 5,800 zone on the lower side.
All right. Sanjiv Bhasin, coming on Yes Bank, this new Jeffries note talking about how they're missing capital. That's the first thing that they need to start accumulating, which they've not managed to do since, Ravneet Gill has come to the helm. They've been talking about it, but nothing material has happened. What would you do? At 92, it's gone down to double digits, but do you expect this pain to linger for Yes Bank?
Well, take it with a pinch of salt, Devina. These brokerage houses were positive 300 plus. At 90, they are selling. So these are more of brokerage calls. At less than price to book from 115 or 1110 if you take, it's the first time in 5 years. Now, the management yesterday was very confident that the capital which they are going to raise is for growth. It's not to balance the balance sheet. And I would take that with a pinch of salt. They've converted some of the errant lenders into equity with the arrangement that they would be divesting some of the stake in the next 6 to 9 months. So I think it's a glass half full, half empty. If you are a little bit of a risk taker, then at 90 you can only make money. I would say you could get closer to 150 by the end of the year. The capital raising is a process. It could happen in the next 2 weeks or maybe the next month, but it will definitely happen in this quarter. And yes, the management is looking for stability on the stock because the capital raising as per the directive has to be in sync with the market capitalization and so on. So like I said, at 90 rupees, there's nothing to lose.
Okay, well, contrarian as he always is, Sanjiv Bhasin, interesting out there. 1% beverages is likely to start off about 5% lower. There is some news out there about negative news for 1% beverages as well. TCS 2.5% lower, 2084. Do watch out for that one. The big boy might be a contributor to the downside in the session today. And amongst the gainers, what is bouncing back is RT Industries. So you got to watch out for that. REC looks like it'll start off marginally higher. Let's wait and watch. And well, lo and behold, Quest Corp might be up today, but it's at 434. That's been a dramatic downside for Quest Corp in the last few days, and this continues to fall. So let's wait and watch what happens there. But a quick index call before we get to all you need to know. Gaurav, Bissa, what's the stance on the Nifty or the Nifty Bank today?
For Nifty, there's a decent amount of writing happening at 11,500 put option. We saw that it had entered the gap yesterday that it formed during the election result outcome. It's not actually tested the lower band of the election gap, but yes, we have seen from low of 11,470, 460, we've seen a good bounce back. I would recommend buying on dip towards 11,500. Keep a 50-point stop loss on the upside. 11,620 is what I would be expecting. For Bank Nifty, it had formed a bullish harmonic pattern yesterday. We called it a bullish alternate shark pattern, and we saw a 350-point upside coming already. I would play on dip, but if you compare both the indices, then Nifty is one where we can see some more upside. We can get more opportunities. So I think it would become very lucrative.
Okay. Chandan, Taparia, what about your index calls?
Yeah, comparatively, I'm more comfortable in the Bank Nifty because it is respecting to the previous swing low and support of 30,250 zone. So as of now, however, market has broken its immediate support zone and turned lower. But the way it has recovered from the lower levels and respecting to support of 30,250, I may see a bounce towards 31,000 in the Bank Nifty index.
Okay, we are just minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Interglobe Aviation promoters tussle as Rakesh Gangwal accuses co-promoter Rahul Bhatia of questionable related party transactions and violating governance regulations. Gangwal has sought market regulators SEBI's intervention in the matter. A stock likely to start off 10% lower.
In earnings which came after market hours yesterday, IT bellwether TCS reported a flat net profit number. Margins fell to an 8-quarter low owing to higher employee costs in what is usually a seasonally strong quarter.
State Bank of India has lowered its lending rates by 5 basis points across all tenors. This comes a day after RBI Governor Shaktikanta Das said he expects faster transmission of the 3 repo rate cuts.
Dr. Reddy's Andhra Pradesh plant gets 2 observations under the Form 483 from the US FDA.
And in key brokerage calls, Jefferies cut Yes Bank's price target to 80 rupees from 155 rupees, the lowest in the Bloomberg consensus. The brokerage firm also maintains an underperform rating for the bank. And well, surprise, surprise for Jefferies, the stock is holding out, but let's wait and watch. As Sanjiv Bhasin said that he might actually be a buyer at this 90 rupee mark. Yes Bank is the top gainer. TCS is the top loser in the session today. It's having its impact on Infosys. It's having its impact on Tech Mahindra. Do watch out for these. Chandan, Taparia, would you brace for collateral damage in any of the other IT names? Is the Nifty IT looking weak as well?
Yes, I think selling pressure may continue in Tech Mahindra. That is the weakest structure in the entire IT pack, continuously making lower top, lower bottom on the weekly scale as well. So here, till it remains below 690 zone, we are expecting it to go down to a 650, 645 kind of level. And apart from that, I think Mindtree may continue its decline. The stock has already fell down sharply, broken its trend line support. So here the resistance comes near to 788, while on downside, it can test the recent swing low of 735, 730 zone.
Okay. That's some of the IT names out there. The other one I want to talk about is UPL. Sanjiv, the excitement around UPL lasted for about 7 to 8 days. Post that, the last 3-4 days have been witnessing some correction. But within, this particular pocket, agrochemicals, while having an international exposure is slightly better, UPL, PI industries compared to the others that don't and have just a domestic presence, do you think that this edge could last longer unless and until some serious earnings performance kicks in?
Correct, and it's been a bellwether in the agrochemical space. There was some doubt on the Brazilian business, but the company allayed that. And I think the working capital or the debt is more in work in progress. So again, it's an overowned stock by the FIs, and when there is this type of unwinding, these stocks do get, but that's the opportunity. However, Devina, I'll take you to another stock called Rallis India. It's from the house of Tata. It's a subsidiary of Tata Chemical, and we think it will be a big gainer once the onset of monsoon is fully there. We think they are gaining market share in the agrochemical business. They have a 21% share there, and this recent merger of the consumption side, aside from the other businesses, will be a welcome sign for Rallis. We have an overweight on Rallis on this 145, 150. We think this can pleasantly surprise on the upside, given that margins and volumes may expand once the monsoon is well set. So Rallis would be my top pick at this price.
You know, Neeraj, one stock which is quietly, probably not got too much attention, but in the last 7 days, Religare is up 72%.
Confess complete ignorance. Don't quite know what could be the drivers out there.
It's just, on a daily basis, the stock's been gaining in double digits, 72% in just 7 trading sessions, and probably being overlooked amongst the gamut of other stocks that are there, but it's making its presence felt now.
Yeah, certainly so. From a trader's perspective, certainly very welcome. Let's see if there's a fundamental reason out there. I wonder if any of the brokerage stocks fit your bill, Sanjiv, Bhasin, brokerage stroke, diversified financial names. I know you can't talk about IIFL, obviously, but or IIFL Holdings, but Motilal, Religare, MK, Edelweiss, anything?
So I would say Motilal, given the PMS. Now, Neeraj, I'm not looking at the next 12 weeks. But if I can stick my head after October, you'll see the best part of the market which we've seen in the last 3 years. I think the next 18 to 24 months from October are going to be the best ever. And that will mean the money which is going into MIPs is going to slowly but surely desist and come into SIPs. So I think PMS is going to be the flavor for the next 2 years. And Motilal Oswal has a niche over there. So if anything, I would use all declines or a SIP to buy that stock for the next 12 weeks. And the next 2 years could actually be quite brilliant, given the emphasis of more SIP and more money coming into equity rather than the debt market.
Okay. Well, for Sanjiv, it's been a really good morning having you, and enough ideas from your end, a lot of conviction too. Thanks so much for joining in today and giving us your thoughts. Well, about a minute left for the markets to kickstart trade, and we'll take in some opening thoughts from our experts as well. But first, let's take in the top trading call from both Gaurav, Bissa as well as Chandan, Taparia. Chandan, I'll come to you first. Your top call for the day today.
Yeah, selected to be with Reliance and Bharti Airtel. So here I'll continue to be with Reliance Industry with the stop loss of 1255 and expecting it to move towards 1330 levels.
Gaurav, Bissa, what about you?
For me, it would be Havells, the kind of move that we've seen, some amount of covering, and the bullish harmonic pattern. I think this is one that should be on the radar. Can go towards 765, 770.
Okay, Jaiman, stay on. We'll just take in opening thoughts from you post-market open, and then, of course, welcome in Sanjay Mookim from Bank of America Merrill Lynch as well. He'll be joining us on the show to talk about the fundamentals. But here's how the markets are starting off. Flattish. Maybe a 0.25% lower. Bank Nifty is flat, but this is in line with what I think the rest of the Asian markets or what the US markets have done as well. Donald Trump's tweet thus far hasn't hurt India too badly. Let's wait and watch. Maybe the proof or the action might actually hurt and not just necessarily the warning. Let's wait and watch. The mid caps and the small caps should come up on your screen as well. Again, very, very flattish moves, so no big changes really on the bourses early morning. Let's wait and watch what happens next. Interglobe is the bigger one, and after the heat map, we just show Indigo for a bit, but this is what the Nifty 50 is doing. TCS starts off 2.5% lower, Hindalco about 1% lower, Tech Mahindra about 1% lower, Bajaj Finance about 1% lower. So those are the top 4 losers, but TCS is the big boy, and IT is under a bit of a cloud amongst the losers, by the way. And the gainers, IndusInd Bank about 1% higher, Z about 1% higher, but a Aside of that, not too many stocks which are gaining. Maruti may be marginally higher in trade. Market breadth, even Stevens, 1:1 in favor of the declines in the advances. TCS is the big boy from the market side, from the Nifty 50. Quickly bring up the next set of stocks that I want to highlight because Interglobe Aviation features there. Want to see what aviation is doing. Indigo, SpiceJet, Jet Airways, all three should come up on your screen. And Indigo down about 10%. This is arguably the steepest fall that I've seen Interglobe Aviation have, because when the first sign of the spat broke, Indigo had fallen about 9%. Remember that? Down about 10% today. SpiceJet 7.5% higher. Jet Airways about 5% lower. That's okay. That's immaterial. But these are the two, Interglobe Aviation and SpiceJet. SpiceJet getting that maybe that advantage in perception. This might not be long-lived, but you never know. For now, the stock is up and about and zooming. Interglobe Aviation 10% lower. Stocks that were in focus the last few days, underperformers, Mindtree, REC, what have you, Quest Corp, all of them start off flattish. REC, in fact, up a couple of percentage points. Devina, what are you spotting?
Religare for one is up about 8.5% again. Looking at some of the smaller banks, IOB moved up 4% odd. Syndicate Bank is up about 2.5% as well. Realty stocks yesterday, particularly Oberoi Realty and Prestige Estates, were the two stocks that gained about 7 to 8%. Oberoi Realty in today's session is up 2.5%, while Prestige Estates gives back a little bit, so 1.5% under. Godrej Properties, on the other hand, marginally rose by about 1% yesterday, is up about 1.5% in today's session as well. JSW Steel, that's up about 0.5%, and then you've got the likes of some of the other names within the broader market space that are doing relatively okay. Advanced decline ratio is tilted more towards the favor of the bulls this morning, but marginally. About 600 stocks that are advancing, 475 stocks declining. Minda Corp is up about 3% odd. Edelweiss, we spoke about that one. The stock's up 1.5% odd this morning. NMDC has moved up about 2.5% as well. And Dewan Housing Finance, which was down by about 10% in yesterday's session, is up in today's session by about 1.5% odd. 1% Beverages down 5%. Cox and King down about 5% odd. 7-day tally 30% shaved off. Then the likes of an 8K Miles, McLeod Russell, Bata. Bata over the last few days has witnessed some amount of pressure. It's down about 1.2% in today's trade as well. Quick opening thoughts from both our technical experts. Chandan, just a quick word on Bata though.
Yes, we have seen some selling pressure in most of the consumption name, including Titan, Bajaj Finance, Bata. Comparatively, Bata is having the strongest structure, but because of the market selling, it already corrected by around 5% from higher levels. So here I'll wait for some more declines towards 1340 zone. So I think near to that level, again, one can go long in Bata for fresh leg of rally. So some more decline could be seen, and I think the decline can be bought for the next leg of rally in the Bata India.
Gaurav, Bissa, what would you do with a SpiceJet today?
No, I would be a little bit skeptical. Whenever we have seen that one or the other name is under pressure, like Jet Airways or Indigo, the one unit has been always standing out is SpiceJet. So on that front, maybe some more benefit can be expected, but I would not be too gung-ho about the name. I would rather play with the levels, and I don't see that at the current levels one can play for a trade only on one aspect. If somebody is playing, that would be more of a luck trade. So I would not be too interested. But if you want a fresh trade, I think IGL is one that should be on the radar. There are a couple of reasons for that. One, it has bounced back from the immediate support area of 300. A lot of writing has been seen in that particular option. Also, it has found a very nice morning star. We call it as doji morning star. So if the current levels of 305 are sustained, one can expect a 10-15 rupees up move in next 2 days.
All right, gentlemen, we leave it at that. Thank you so very much for joining in this morning, Gaurav, Bissa and Chandan Taparia. Bringing in another important voice, Sanjay Mookim, India equity strategist at Bank of America Merrill Lynch. She's joining us on the show this morning. Sanjay, thanks very much for taking out the time. All of the big events out of the way, election, now budget. How does one approach the next 6 months of the year? And what should the investment rationale be now?
Okay. Good morning. I think the answer to your question is that one has to be now extremely bottom up and look at individual stocks for the next few months. Because if you think about it, India is going to be devoid of any top-down macro event until really the next budget in February. And you can debate whether that's going to matter as well. On headline, which is the index, MSCI India or Nifty, India will continue to move in line with what is happening to EM. Right? In fact, the corrections we've seen in the last 2 days, for example, were accompanied by weakness in the region as well. If you get, let's say, a resolution to the trade wars, maybe EM has a rally, India will probably also see a rally. But the hypothesis for equity investors, to my mind now, has to be to wait for a growth recovery in India. Right? There are some green shoots, and we can talk about that. But if you are buying equity for growth, then you need to go off benchmark. You need to be very company specific, but you also need to be patient. Okay. So again, very bottom up, very company specific, a little bit boring. That's how the market's likely to be for the next few months, I think.
So then would you divert your attention to, the broader market space, if that's the approach that you're going to be taking? And whether or not this discount differential that we are seeing between the large caps and the mid caps because of lack of quality names available to invest in the market will sort of come off?
So yes, that is the incremental trade really, because you start with assuming that India's growth weakness, as we are seeing today, may be temporary, that their liquidity easing that we are seeing now, that lower interest rates will prompt a recovery in demand and aggregate growth in the economy. And for that, you will have to buy growth stocks. Now, large caps have re-rated. There has been a herding in large cap stocks. The relative gaps in multiples for mid caps versus large caps is no longer adverse. Mid caps are now almost at the same multiple at large caps are. They probably need to be at a discount, but again, we're not paying a premium. So if you believe the growth is coming back, then like I said, you need to look at the broader market. You need to go off benchmark. The question here is of timing and making sure that you get the cycle right. And that's why I said that you probably need to be very patient when investing in markets at the moment.
Sanjay, good morning. Neeraj here. What was your first, or what was your initial post-budget note looking like? And do you think because of the taxation issue, which thus far hasn't seen any comments coming from the government, on the flip side, some of the FPI investors and particularly Cat 3 AIFs might look at India as an unfavorable destination? Have any of your clients voiced concerns with regards to that?
Well, I think there was at some point some confusion on whether the tax is applicable, but I think with time that's becoming clear that as the letter of the law stands, it does apply to a lot of these investors. And our sense that it will apply to a majority of people who are currently investing in India from abroad. Now, we've got to figure out what is the treaty arrangements and can they get exemptions against that and all, which is not, which has to be worked out. But I suppose that everybody is reconciling eventually to having to pay slightly higher tax. Now, my submission here, Neeraj, would be that, look, if you can make returns in India, then a 3%, 4% higher tax may not deter investments, especially if you had good ideas to invest in, per se. I think the bigger issue is for most investors is that they kind of not have too many ideas, especially if you're a long short hedge fund looking to invest in India. And that, I think, is a bigger reason for people to stay away.
Okay. No, so I'm just trying to get a sense. You reckon that tax by itself is not necessarily a deterrent for any of your large clients. They are taking essentially a macro call on India and not taking a tax call currently.
Yes.
Okay.
Correct. So I'd put it this way, that look, if you were convinced that you can make 20% returns, the tax doesn't matter.
Are clients convinced they can make 20% returns, Sanjay?
No, they're not. And that's what I was saying, that look, the market is currently extremely devoid of ideas. Its conviction is missing. And that's the reason the activity might be low.
Okay, fair call. What about the slightly medium term, Sanjay? And I don't know what your research team estimates for Q1 are, but we were talking to the Citi team day before yesterday, and their assessment was that Q1 for their coverage universe could see a mere 3% growth. Titan has sounded a warning. Sanjiv spoke about the consumption space looking weak. HDFC Bank numbers won, at least the advances won the strongest. And TCS numbers give an indication of all not being well with IT either. We're looking at a damp squib of a Q1.
Yes, so if you leave out the banks, and financials have a specific issue of base effects, lower provisioning and so on. In fact, in our coverage universe, we are looking at a 14% decline YOY. Now, this of course depends upon which stocks you're covering and so on, so it might matter. But the sentiment we'd echo that across the board, it's either down or decelerating in a way. And therefore, this quarter is not going to be the redemption for markets if you're expecting any sort of green shoots in numbers. So this quarter and possibly next quarter is likely to be under some pressure. I think the hope for the consumer pack is really the festival season. And if you can create some sentiment and create some momentum around the pujas and so on, then you might see some earnings surprises, but otherwise it's going to be relatively weak.
You know, the festive season last year was also much anticipated with regards to a possibility of a pickup for the auto sector, which didn't happen then. And, you know, the way we are headed at this point doesn't look like it could be much of a game changer even this time. We've got Maruti sub 6,000, M&M has moved lower, its P multiples much lower than even its 10-year average. You know, would this actually be looked upon as an opportunity, or till you really don't have a clear indicator how things are picking up on ground, you might as well be safe on the side?
So look, the impulse is to suggest, Devina, that look, any weakness becomes an opportunity, especially if you are a medium-term or a patient investor, right? So when it looks like doomsday and people start talking about structural issues with economies or companies, that's when you try and take a counter view in investment. My concern is that yes, look, it's happening. The expectations are falling at the moment, but multiples do not fully reflect that. So even the auto names, some of them are still close to 20 times 2-year forward EPS, and much of the correction in stocks has been gone. EPS has fallen. So either I buy the recovery or I buy the multiple. I don't think in many cases I have either of that available today. Right? So yes, if it remains as gloomy as it is and expectations continue to fall, it will become a good opportunity for somebody looking at the long-term investment in India.
Any interesting observations, Sanjay, that your research has been able to throw up with regards to, you know, a trend that you've picked up, or some data point that suggests that, you know, probably there could be some concerns with regards to a further pullback, or there could be a bigger upside to the equity markets?
In fact, we've done a lot of work on this, and the answer to this is that there is no trend. So what we did as a team is we went and read the transcripts of all consumer-facing companies in India, because companies provide a lot of commentary in their results when they talk about what's happening on the ground. They may not print it in numbers, but they at least talk about category-wise, consumption demands, trends, etc. We put it all together, and the conclusion is that there is actually no trend in the consumption weakness. So you cannot say that it is a rural slowdown, you cannot say it is an urban slowdown or a mid-market or a mass market slowdown. There are patches of weakness everywhere. And the correlations the market tends to talk about also are not evident. For example, the state with the worst auto sales today, which is Maharashtra, is the state with the best loan growth. So this assumption that it's the liquidity crunch that has caused this slowdown is certainly not valid. And therefore, our argument in that note was that this consumption weakness is actually very idiosyncratic. Okay, there are very bottom-up reasons. There might be sector-driven drivers that are causing slowdowns, and therefore, investors should not be worried about a macro weakness, etc., but focus on bottom-up, focus on what's happening to every company, and track every company bottom-up if they have to catch the turnaround. Okay, because clearly there is no clear answer to why this has fallen off a cliff, and you might miss the move up if you start looking at only the macro and top-down.
Sanjay, I want to go back to the question on whether your larger investors are looking to invest in India from a growth standpoint. I mean, we just received a note from HSBC, and obviously not to say, to comment on that, but they're talking about China being a bigger destination from a valuation standpoint, from a growth standpoint, demographics being better in China versus India. Do you think all of this plays up on the mind of the foreign institutional investor while taking a call on India?
Well, the last bit certainly doesn't seem to be true. Demographics in China is worsening. Their labor force is contracting. India's demographics, or India and Indonesia, are probably the only two large countries where demographics are still favorable on a global basis. Right? But I'd step back and argue that, look, and we've put it in a note, that growth is actually very hard to deliver. If you look at all emerging market countries prior to the GFC, almost every country delivered at a minimum 5% dollar per capita GDP growth. Right? 5% was par for the course, everybody was above it. Post the GFC, only 2 or 3 major countries have grown even more than 2.5% dollar per capita GDP. That's China, India, and Bangladesh, if I remember right. So within the EM pack, you have 2 broad conclusions. One, that an investor should not have been in EM. Post GFC, growth happened far better in DM than it did in EM. But within the emerging market pack, it's countries like China and India which have grown, if at all. And therefore, they still tend to attract the interest of EM dedicated investors. Okay? And there can be a variety of reasons why this happens, and we can talk about it. But I would argue that within a weak EM, India still looks like one of the shining parts.
But the premium that people were paying for growth, is it justified anymore?
Okay, so that is a very big debate, and again we've done some work on this. I've argued earlier that the premium multiples that have been applied everywhere in the world, and this is not just a phenomena in India. If you look at, let's say, the PE multiples for Unilever in India, Unilever in Indonesia, and Unilever globally, all three Unilevers have re-rated in the same lockstep. Right? The charts are almost exactly the same, whereas growth profiles of the companies is very different. Okay, so it's not just growth that has derated. My argument is that you've also seen a re-rating of the low wall of earnings. So companies which have relatively visible earnings, low risk earnings, have also seen a multiple expansion. Okay, so again, that's a technical aspect. But the reason that you kind of get a premium, or at least in theory, is because you have better growth outlook than your peer set. So one, it's a cost of capital correction, but you have better outlook, which I am arguing that at least in the case of India is somewhat justified. Now, whether 50 times and 70 times is the right number is a debate. I don't agree with that number, but at least the market seems to be comfortable with it.
Sanjay, there are some developments that are happening within specific sectors that are idiosyncratic. Aviation, for example, jet was an issue. Now we've had Interglobe promoters also having a bit of a spat. It's a small pocket, but one that's actively tracked and global in nature. Do you guys have any thoughts here?
No, we don't cover this space, unfortunately, Neeraj. And I don't track it myself, so I don't know if I can comment on this too much.
No, fair call. What about how would you approach banks? Now, the difference would be that this time around, the corporate-facing banks or some of the PSUs, large PSUs, might have a write-back of provisions which might make the bottom line look strong, but the loan growth and the top-line growth may still not be visible. How do you decide whether that's positive for the stock, because the bottom-line print will be showing, but the top-line growth will not be there?
Okay, so in one of our notes previously, we have argued that banks or financials is the one space that does not react to EPS or EPS upgrades or downgrades. Almost every other sector and company, the stock tends to move with earnings upgrades and downgrades, other than for financials. Now, if you think about the outlook for financials, the fact of lower provisions, the fact of these write-backs is very well understood by the market. However, an environment of slow growth and falling rates is actually negative for the profitability of these banks. It's negative for the forward ROEs that these banks might deliver. So on incremental development, which is the fact that growth is slowing, loan growth is slowing and is likely to remain weaker for some time, and that rates are following, you might be a little bit concerned on banks. The only reason I suspect that they still hold up and there's still a lack of selling out of these banks is because there's nowhere else to go. Right? If banks are a very large part of index weights, most funds are sitting with 40, 50%, 60% of allocation to banks. And if you cut that weight, you really have a problem allocating that money elsewhere, especially with IT, like you said, also appearing under a bit of a cloud at the moment.
Sanjay, would you say that, while obviously when you're not talking about just pure play consumer staples, all companies related to consumption, say for example, your consumer discretionaries, you have your auto angs, you have your staples, you have things related to consumption, farm income. Is that the theme, a central backbone that you would suggest that probably one can go by instead of the bigger theme like investment, or would you say vice versa now?
No, I would not say that. Look, let me say two things, right? That I am not too concerned about the volume growth trajectory of consumer names over a 3-5 year period. So the argument that India is structurally slowed down is not true. In fact, I was saying that we are hopeful that the growth momentum will actually improve. So volume growth is possibly likely to stabilize, come back. Even for the auto space, I would argue that if you give it a year or two in time, the growth numbers will probably look much better than they are today. The question really is for expectations in terms of margins for many of these companies. They've seen significant benefits, and consensus needs to probably cut those numbers a bit over time. And then, of course, is the valuations you're paying for them. Now, if you don't worry about these multiples, at some point you will have to look to go back into the consumer space. I think it's a little bit early at the moment.
Sanjay, you spoke briefly about IT. I'm just wondering if the base case on the currency or the base case on the dollar is dollar weakness, and therefore a lot of emerging market currencies strengthening and maybe India strengthening as well. In light of that and the fact that banks and retailers might all pull back spending, would IT, would other exporters all be largely underweight?
So we are currently overweight on IT, and it's worked so far this year. And the question is really what you do now that you've earned some alpha on IT. And I agree, the concerns that you highlight on not just the currency, but in terms of the end demand as well, and plus margin pressures, these do tend to imply that you will see some sort of downgrades happening for IT earnings. I think the question that most investors are grappling with, especially the benchmark investors, is where is the downgrade going to be the least? Because if you go sector by sector and company by company, in most cases you're looking for downgrades. So I think again for IT it becomes more of a relative call than an absolute call, which is why we haven't yet cut our overweight position on it. But yes, on an absolute basis, I think that downgrades are more likely than upgrades for the IT space as well.
Okay. Sanjay, what about pharma? Again, not a space that has really performed. There are idiosyncratic issues with each of the companies as well, but exporting theme. But again, the whole argument about how if the US is indeed slowing down, if the currency is indeed looking like strengthening in India, does that sector remain an underweight if you were underweight on it in the first place?
So the problem with pharma, like you said rightly, Neeraj, is that you have to be very company specific. You cannot basket buy pharma because of a macro theme. Once in a while you could do it, but not on a daily basis. And therefore there are some pharma companies we like, some pharma companies that we advise against. In many cases the multiples are fair. I mean, I don't think that the multiples have become cheap yet in a lot of these companies. So it could be a decent place to have some allocation, but again you've got to be very company specific in this space.
It's very interesting, Sanjay. Just going by the nature of the places where you are either overweight or underweight on, I'm guessing, and correct me if I'm wrong, but I'm guessing that you're not highly overweight on the Capex revival theme, are you?
No, we're not. I mean, we have... See, the problem with being a Capex revival theme is that industrials has only one large cap stock in it, really. And that has a modest weight in the index. So how much of it can you buy? So what ends up happening is that people then buy cement, buy some of these ancillary, possibly look at some NBFC mortgage sort of lenders in order to express their rising investment hypothesis. So it's very difficult to express in terms of portfolio construction. But no, we've actually downgraded some of our industrials names recently because we think there is no further impulse to Capex in the country and multiples have gone up of late.
Sanjay was just looking through some data with regards to stocks that are trading on the Nifty 50, stocks that are trading at a discount to their last 10-year P multiples, and how the return on capital employed for some of these names have moved. So for some, growth, 10-year growth CAGR still seems to be in their 20s, 17%, 20%. But the return on capital employed has dropped drastically from highs of about 25 to 30 to single digits. Is that something that one can use as a benchmark or a demarcation right now to sift through and probably pinpoint stocks that could be the big multi-baggers of tomorrow?
Well, I have a feeling that many of the stocks you're looking at will probably be SOE or PSU stocks, which clearly seem to fit that description. Now, the trouble with the PSU stocks is that with the supply that the government is promising, and of course the return of cash through higher dividends and I don't know buybacks will happen or not now, but many of the balance sheets and the technical overhang on these PSUs remain. So some of these are, attractively priced as well, single-digit PEs as well. But as a strategist, I have been advising clients to stay away from PSU companies because there's just too much of an overhang from the kind of supply that we expected to see over the next few years. Okay. But no, I think your broader question on, let's say, ROEs, if you look at ROE of the Indian market, it has been steadily falling for the last 10 odd years. People have stood out and said this is it, profit to GDP or profit metrics in India is at an all-time low. It must now therefore go up. I don't think that has worked, or there's any logic for why it should go up from all-time lows. So I think, again, going back, you still need to see which company is executing well, where the prospects are better, and I wouldn't look at the aggregate metrics and hope for turnaround in just that.
So probably a mix, a blend of both, not just one.
Yes, no, you still have to be very specific, I suppose.
All right, so still maintain the growth trajectory. All right, Sanjay, it was great chatting with you. Thank you so very much for joining, and really appreciate you taking out the time.
The equity markets seem to be doing okay, Devina. Sanjay Mookim seemed maybe neither here nor there in terms of trying to buy, but the equity markets thus far this morning have not done too badly for themselves, even though Interglobe Aviation may have been dished out some rough treatment.
Yeah, 0.25% higher on the Nifty 50. Interglobe now down about 13%. SpiceJet, on the other hand, taking full advantage of what's happening to Interglobe. And in the session's morning trade was up about 8%, still holding onto those gains of 8%.
Yeah, Bajaj Finance is down. Tata Motors is a bit soft in trade today, 1% lower. Z about a couple of percentage points higher. So do watch out for those. And at the broader end of the spectrum, just mark some stocks. Yes Bank has some uptick despite the Jefferies downgrade. Kolte Patil has some uptick. There is some strength in IOB, and Balrampur Chini is back to 154 levels. What's not doing well aside of Interglobe Aviation is Reliance Infra, which is down to 46. There is Chennai Petro down about 2.5, and Adani Power yesterday hitting fresh 52-week highs. In today's session, slightly off, about 1.5%. Take a break. Come back with more. Has the budget done enough to support growth in India? We talk to Mahesh Vyas of CMIE.